And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets, as always, with an eye toward helping you prepare not only for next week, but beyond. We are seeing a bit in the way of shifts that are taking place here, and I look forward to sharing that, plus a whole lot more. Let's take a look at our agenda. As usual, we're going to take a look at where the markets are currently. We had a bit of a dicey period last week, so we'll see where we stand currently. Also, what will 2021 bring? There are three different themes that major Wall Street money managers are on the prowl for. So I will share those three and tell you where we stand now as far as what areas are anticipated to outperform this year. Also, stocks breaking out of bases. There's always a stock breaking out somewhere. So I'm going to share with you some of the more attractive names. A lot of that is going to be earnings related, but not always. And then also we are going to take a look at downtrend reversals. We're starting to see recovery stocks rebound. We'll get more into that, of course, as we move along. And then energy, biggest performer this week, up 8.2%. This is a theme that I pointed out last fall that is definitely taking shape and having more in the way of legs, certainly after this past week. So let's take a quick look at some of the news items from this week, always so that you can have a backdrop as to why what occurred may have. So we can see today, we actually did get 9 non-farm payroll numbers. They did grow in January, but less than half than was expected. And normally this would impact the markets negatively. You do want to have a more fully employed population, if you will, but it was viewed as a potential for increased stimulus. So the markets took the positive spin on those weaker numbers. Also, yesterday we did see weekly jobless claims. They did come in slightly less than estimated, so but not enough to get overly excited about, but that is good news. US factory orders were up 1.1% in December. Very vibrant activity continuing to take place. This last bullet is from last week, so we can ignore that. But generally what we are seeing is a continuation as far as, in particular in this factory orders number that was very bullish, is the fact that business spending, and that's going to be equipment related and otherwise, is anticipated to continue to expand. So good news there. Let's go ahead and take a look at the broader markets. We are looking at a daily chart here of the S&P 500. And this is last week's action, of course, very, very concerning because we did have these outside momentum indicators. Your RSI and your stochastics did turn negative into the close. We did find support at this 50-day, however. It dipped below it, but did close the week just at that 50-day, and it has continued to hold support. And then, of course, this week, the markets are very vibrant, up 4.6%. So we did send an alert out midweek to MEM Edge subscribers, advising that the markets had in fact turned positive, and that was signaled by this break back above these shorter term simple moving averages. The green is your 10, the pink is your 21-day. So we were on the prowl for a break back above that. We did get it. We also saw a reversal of these outside momentum indicators. So our all-in signal did emerge. So that's good news because we did then from here, we are closing the week at a new high. So a very swift recovery, but we did in fact experience that. Let's take a look at the underlying sectors within the S&P, get a better feel for what may have driven these markets higher. First up here, of course, I do have all the sectors. I add an RSI, a momentum indicator, and then I want to see that descending. I want to get a feel for where the strength is. That's going to be up here in this upper left quartile compared to where the weaker groups are. Of course, we always want to play to that strength. So being able to capitalize on it is, of course, our goal here. So we can see XLC up here in the forefront. It was up almost 7% for the week. We can just take a quick look because I will say following these sectors very closely is a big part of my work. And in the beginning, communication services really struggled to become and get to be a part of the broader markets. We finally did see a nice uptrend to very quickly be swatted back down, but they are on good footing. A lot of that, of course, Google was up 14% this week after reporting stellar earnings. So a lot of the internet related stocks, there are others within that area that are also coming in with good numbers. It's all about advertising sales. So this is very constructive. It's another angle as far as what you might say as it relates to business spending. So that certainly is good news there. Real estates, it is kind of bubbling, but it was not an outperformer this week. This has to do more with last week's move into some of these more defensive areas. Consumer discretionary, let's take a quick look at that chart. We can see that it just budged up here to new highs. A lot of that is the recovery play. We're seeing moves into gambling, hotel related types of stocks. I want to make sure this is updating. And then from here, we can see technology was really middle of the pack. It did outperform the S&P, but it was up only 5%. And that has everything to do with their two major holdings, Apple and Microsoft. They did well. Apple was up only 3.4. I say only. That tells you what kind of a week that we did have this week. The NASDAQ was up almost 6%. But let's take a look. Financials among the top performers, yet again, a nice downtrend reversal taking place this week. Down here, we have your momentum indicators, MACD poised to trade higher. So that was really exceptional. You want financial stocks to be outperforming. The group was up 6.7% this week. This is all about the proposed economic recovery, and financial stocks doing well is all about improved lending, which implies an improved economy. So let's go ahead and move forward because I do want to share this energy chart with you. This is XLE. The group was up over 8% this week. Big news I'll share with you next week. In the next chart, one of the drivers, but we can see this is the period when my MEM Edge report, as well as those who follow the show, I did turn bullish on the group back here, and it did serve us quite well, stayed with this pullback, but this did shake out a number of the stocks that were on my list. But we are looking to add them back because the dynamics are certainly in place. We'll get into that as we move on. And some of these other lagging areas, healthcare was a surprising laggard, and I'll tell you why just now as we move forward. So let's take a look at beyond the sectors. We want to see those industry groups underlying these sectors to really drill down and get a better feel for where the strength is. So I've gone ahead and added the NASDAQ, the US 10-year yield on the Treasury, bank stocks, software stocks, IGV is the ticker or the ETF that I like to use, semiconductors, biotech stocks, and so on. So let's go ahead and the similar exercise with the RSI descending, update this, and I'm going to just we can see retailers in here. This is IBUY. I talked about this ETF last week, and it is a lot of underlying retailers that are digital sales, online sales related. If we have time, I'll dig in again and share with you some of the names in there. But really what I wanted to focus on here is the price in crude oil. This is using Brent, and we can see that it had a very nice week this week. It actually is hitting a new one-year high. So Brent oil was up 7% this week, up to $59. So for many weeks, I was telling you about that $50 level for oil. For a lot of these companies, that's their break-even mark, so that if oil prices sustain a level above that, we could see actual profitability in some of these oil companies. So this move to 59, your next psychological area here is $60. If we get up above there, that's going to be even more bullish. A lot of dynamics are taking place within energy. It is part of the recovery play as well, but I do get into that with my report. For those of you, urge you to take a trial, and I can walk you through some of the dynamics and why they are taking place. Software stocks had an excellent week, up 8%. We had this nice base breakout here. A lot of stocks on here are in this group within software are reporting very nice numbers. It all started with Microsoft, which is up over 4% this week after last week's bullish numbers. So a lot of in the way of cloud computing, that shift. I will tell you, Jeff Bezos uh, stepping back from Amazon is all about the continued growth in their cloud computing area. And that was just another big check mark to the plus side for these software stocks. So let's take a look at another area that really pushed and improved, really impacted the markets this week. This is a look at the yield on the 10-year Treasury. Take a look. I'll pull up a weekly very quickly to give you a better feel. And it was up 7% for the week. So higher yields are quite constructive for bank stocks. It did also cause a steepening of the yield curve. And here we are with KRE. This is one of the regional banking ETFs. Nice recovery after this pullback. So lots of vibrancy there as well. Another recovery play. So volatility, this is what we want to see. It has diminished down to that 20 level. So nice in that sense that the volatility and a lot of the back and forth that occurred last week does seem to be subsiding. The short squeeze is still in the news, but not quite front and center. So that is your broader markets. Drilling down into the indexes, I'm going to take a very quick break here, and from there I will share with you that 2021 outlook, how you can stay on top and track which areas are currently outperforming and what may beginning to come into play. So we will be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And welcome back. We are looking here at what is called a perf chart from StockCharts.com. I've populated it with very select indices, and it's taking us back to December. So I talked to you about the certain themes, not themes, but certain areas of the market that Wall Street is on the prowl for that they may take shape. So one of the first is that move into value. So a move away from growth stocks into value. The other is emerging markets. I talked about all of these. There is a 2021 Outlook video on StockCharts.com, but the other is a pronounced move into small cap stocks. So what I've done here is I have the NASDAQ here, that's going to represent the growth area. And then I have some ETFs here from Vanguard. VUG is their value. I want to make sure I have this proper here. So actually their growth fund, and VTV is their value. We have the S&P, IWM is the Russell 2000 small cap. And then for that potential move into emerging markets, I'm using EEM. So quite simply from here, this chart will plot the performance going back, and you can modify that to your desire. I happen to go ahead and look at it from the beginning of December. I'll go ahead and shorten that move from there. But what I did want to point out to you here is very, very clearly, this move into small caps is alive and well. And again, this is another bullish signal because as small caps do, they will outperform during a period of recovery. It's a bullish sentiment for the economic recovery. So from here, what I did want to point out to you is the next performer, and this is going back over 40 days, is emerging markets. This is going to be China, India, and areas. I'm trying to think of the other areas that would be in there, but take a look. It is the next performer. This black line, and I'll share what we're going to do is I'm going to share with you some small cap stocks that look attractive. There are a ton, also a couple of ADRs from India, but more to the point here is we can see that the NASDAQ among the US indices outside of small cap is up quite a bit. And then from here, we can just take a look at some of these other ETFs. This is the Vanguard Growth ETF, and then we have the S&P. Take a look, that value ETF is down here very much in the lower quartile. So it's been fits and starts with the move into what are called value stocks. And I can tell you, looking at the underlying holdings with that value, it is Procter & Gamble, Johnson and Johnson. So it's a lot of these bigger, normally known value plays. But let's just take a quick minute here because I did want to shorten up this view so we can see more going into since the beginning of this year to get a sense of what is working. If you can bear with me here, because I'm trying to get us just right to that beginning of January. And actually, this will suffice. I don't want to spend a lot of time on this because what I'm trying to point out to you here is the fact that the NASDAQ this year to date, is up here in the forefront, growth very much alive and well, and small caps as compared to that value play. So that is what I wanted to share with you there. Let's move on. I'm going to share, I do have a lot that I would love to get to this week. I'm going to share just a couple of names in the emerging markets area that you can keep your eye on. HDB is India's one of their largest banks. We can see that it had this nice breakout here. A lot of this is earnings related, and it's doing well. And one other stock that we can look at in India, it is a recovery play. They do travel bookings. It's about a $2.50 stock, but we can see it had this nice base breakout, nice volume, and then also the momentum metrics are turning positive. Let's move forward, take a look in China. I'm going to begin by sharing with you a view of the ETF for China's market. This is MCHI, and it is similar. This is a pullback that is similar to what occurred last week in the US markets. It is recovering. So I'll just share a couple of stocks here. If you're interested in looking at that potential recovery play. This is an online brokerage firm. FUTU is the ticker symbol, and the growth numbers are looking for almost 600% growth this year. So pretty much most of those online brokerage firms in China have a very similar look, and it is in line with what we are seeing in the US with some of these online brokerage firms because there's been such a pickup in trading. This is Interactive Brokers, IAC in the US. I don't mean to switch back and forth, but let's take a look. Just a couple of other names here in the Chinese market. This is Baidu, known as the Chinese Google, if you will, but we can see that it had a pullback from a very tremendous 2-month move, and it is now again hitting new highs. Last area, I want to share with you some small cap stocks, and there certainly are quite a number of them. but in screening my using my screens, I did come up with a couple of interesting stocks that you may want to dive into. This is Cambium Networks, CMBM. They are all about telecommunications, and we can see it had this nice base breakout, and it's had a nice 2-week flat base that it is breaking out of. I will say it is extended, certainly, so perhaps on a pullback with that particular name. Let's move on to a biotech stock that actually that chart does not, ups, RXT. Let's get the ticker symbol proper here. This is not a biotech, this is Rackspace. But what I did want to point out to you is that the company on January 26th, this big move here was all about Wall Street upgrade. They have a $28 price target. So the stock had this really explosive 2-day move, but this pullback is rather orderly. And so look for a resumption potentially of that uptrend. One other small cap stock, a little bit more in a recovery mode. It is in a confirmed uptrend. This is Emergent Biosolutions, EBS, finding support at this upward trending simple moving average. It's viewed as a biodefense play because, among other things, they maintain the government's emergency medical supply. And so it's has 153% growth prospects this year, 27% for next year. And one last name that we can take a look at in this small cap space is BL. The company did come out. Actually, their earnings are due next Thursday, and the stock is nicely breaking out of this base. You like to see stocks that are breaking out, certainly due to analyst upgrades. The company provides accounting solutions for mid-sized companies. Take a look at this MACD downtrend reversal, black line up through the red in conjunction with this upside move. So those are stocks in that small cap emerging market areas as well. So we can certainly move on from here, take a look at some of these breakouts, and this is going to encapsulate from my work, certainly more in the way of growth stocks. A lot of these are going to be earnings related. We had a big earnings week, and the numbers by and large were quite constructive. So one stock that we can take a look at here as far as a base breakout, this is Align Technology. And for those not familiar, they do provide the Invisalign brace that is very, very popular. So here's that nice base breakout, very big volume, and the stock gapped up to a new high. So very constructive because take a look, this MACD, we're in the very early stages of this downtrend reversal there. A lot of times it can be really helpful. This was their previous quarterly earnings report. And what you'll see is what I see very, very often with these gaps up on earnings. Oftentimes the stock may have an additional up day beyond that, but more often is the fact that you will get that pullback. So it would pull back very orderly to this 10-day simple moving average. And from there, it was a bit of a grind, but it certainly did trade higher from this 475 up to 575. So a nice significant uptrending advance beyond this gap up. So keep your eye on ALGN. Another name that we can take a quick look at here that also this is going to be a little quieter, but I did want to share it with you. It's a small cap REIT stock, CTT, but the company does provide a 5.5% yield for those of you that might want to buffer any potential continued volatility. But this gap up here did cause the stock to break out of a base, nice volume, and then also the RSI and MACD are turning positive. Another stock that was up this week on improved earnings, or very good earnings actually, is Estee Lauder. Take a look. what we're seeing is a lot of these stocks that are in this space as far as self-care and not just makeup, but the industry has really exploded. So what we have here is a base breakout, big volume, and it's all about earnings. Take a look at that volume. You'd have to go back historically quite far in order to see that. But the thing that caught my eye here is this very early momentum move where we had that black line up through the red. We're just entering into a positive territory. And of course, that is going to be much more compelling as far as potential upside move for the stock. And another name that we can take a quick look at, this company is due to report. Actually, I do want to share a name from my MEM Edge report. Those of you that subscribe and are watching, big hello. I'm sure you're aware of this name. It's APPS, Digital Turbine. Now, I will tell you, we did put it on after they reported their earnings here, but those of you that maybe bought it on the open that following day, it's had a very significant move. It was up another 14% today. So, up 54% for the week, but we can certainly keep our eye on it because a lot of times when you're looking at these stocks that gap up on earnings, there will be historical precedent. So again, we can go back to this earnings report. Now, it was not quite as, I don't want to use the word dramatic, but what I do want to point out is that it can remain, that RSI can remain up here in overbought, in this case for 1 month. So while you may be alarmed, if you will, at this big move, it could still have more upside. So that's where using an intraday chart can come in and help with this kind of analysis. So let's take a quick look because this definitely bears spending a moment on, because you are going to see continued earnings. We're about halfway through earnings season, but a lot more in the way of stocks that may potentially come in above estimates. So here is that gap up on the open yesterday. And what you want to key in on is this tremendous volume. This is telling you people want, or institutions want in, that will help propel the stock higher. When you're looking at a 15-minute intraday chart, I use a 5 and a 13 simple moving average. So you're gonna want to see it contain and continue to find support above here. On that open, you want that third bar to trade higher than that first. That's confirming it's not 100%, but it is a highly probable move that the stock will trade higher from there. And then, of course, we did get a late day pullback. That was a big move for APPS yesterday. But let's take a look at into the open today. Again, that third bar trading higher than that open. And it did, in fact, trade higher into the close. So that can be really helpful when you are looking at stocks that have gapped up, because I'm going to share with you another name that did gap up, but we haven't seen the follow-up. And this is GOOS. And the company is Goose Holdings, an apparel manufacturer and distributor. So we can see this big gap up, and this is the third bar was higher than that first one, but it did not stick. It did go a little bit higher, but when this uptrend on the gap up, if it does fail, it does so very quickly. You can easily be advised that the stock, the upside really is not there. So I am going to share with you just one or two of these reversals because time is running out, but they are definitely worth noting. YETI, this is all about that recovery play, and we can see that it is potentially reversing, coming back up above these simple moving averages. And one last name that we can take a quick look at, because I did fail to mention that transports are coming back. This is JBHT, a trucking stock potentially reversing. I am going to leave it at that. For those of you who are not already a subscriber, take a look at my MEM Edge report. You can trial for 4 weeks at a very nominal fee. Go ahead and use that link below, and I will see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.